Good afternoon, I'm Jeffrey Halley and welcome to BizTech Asia's Asian Midday Market Watch. It's the 7th of February and today our guest is James Wellen, Managing Director of BPC Wealth Management down in Australia. G'day, James.
G'day, Jeff. How are you now?
Yeah, good to hear a semi-familiar accent.
It's always good to talk to one of our cousins from across the border, even if you're up in Singapore, mate. So it's always good. Great to chat.
Well, before we get into the interview structure, let's have a look around at Asian markets today. But a bit quieter than yesterday. The Nikkei 225 in Japan is down 0.2%. Shanghai, after an enormous rally yesterday, is up just 0.66% today. Similarly, the Hang Seng also climbed aggressively yesterday, but it's down 0.31% today. Down in Australia, the ASX 200 is up 0.47%. South Korea's KOSPI is up 0.98%, while in Singapore, the STI is up 0.84%. Down over in KL, we see that the KLCI is down just 0.11%. So a bit of a mixed day there, James. Any particular thoughts on it?
The thoughts are going to be that all eyes are currently on China at the moment. But after I'm going to come out and say we've got a bit of pre-Golden Week craziness that's going on before the new year kicks in on that one. And I think that based on the fact that a lot of stocks were a little bit down in China early in the week, and a lot of stocks seem to have been massively recovering with the state. And we'll get into this in just a second, but with the state sponsorship of the purchasing of the stock market over there, I think that a lot of markets are sort of sitting on just waiting and seeing if that's going to be followed through to see if Asian strength is actually, real, or if it's just more of this sort of fake out, yes, China could get a little bit cheaper situation that we've had over the last couple of weeks. I won't tell you what I think until you just go into what your question's about to be. So go on.
Stealing my thunder there. Look,
I don't want to get in the way. Go on.
No, look, let's stay on China. Shanghai and Hong Kong had massive rallies yesterday after the China brought in new restrictions on selling by institutional investors in China itself, and also news that President Xi would be personally briefed on the stock market situation. I guess the $64,000 question is this the light at the end of the tunnel for China stocks, or is that still potentially the train coming the other way?
Mate, if I had one Chinese yuan for every time that I said that China was cheap and you have to get in, then I wouldn't have to be sitting here talking to you, with all due respect, Jeff. We
call that cost averaging.
It just keeps on getting to a stage where it's cheap. A couple of weeks ago, I put out a note to clients saying it's where you need to be buying. It's cheap. It turned out that a few days ago, and then definitely last week, it got cheaper. There is a point where it's not about the sponsorship, but it's also about the just the simple valuation of some of the stocks behind it. So you have the valuation, that's great, but then you also have the fact that when President Xi actually gets involved and wants to step in and there's only one person that can actually step in and do this sort of thing, and it's going to be him. That's what he's doing right now. The fact that he's meeting with financial regulators to discuss China's stock market, and that gets disseminated to the market broader, that means that buying has to come in. What's happening though, Jeff, and where people need to really watch out for it, is that they're misinterpreting Chinese rallying with China rallying, i.e., if you're looking at the A shares and you see that it ticks up 3.5% or it continues to go up, some people are buying copper. No, right now so this is the little tip for you. Those should not be associated together. The correlation right now should be disassociated. The fact that Chinese stocks are being bought is purely manufactured and synthetic, I suppose is the word that I want to go for on this one. Yes, state sponsorship of the purchasing, but it's not Chinese strength. It's Chinese state sponsorship of the stock market strength. It doesn't mean you shouldn't still be behind it, because it's the valuation on these stocks is still there. However, this is not a what's the word I'm looking for? This is not a replication for Chinese GDP strength, for Chinese growth.
The economy in general. Right, exactly. Okay.
Yeah. Don't get those mixed up today.
Right. And let's just head down to your part of the world now. The Reserve Bank of Australia yesterday did what I can only describe as a hawkishly unchanged rate decision. What are your thoughts on the RBA meeting from yesterday?
Look, it's a whole new way that the RBA is doing meetings. It was a pretty meat and potatoes. Theoretically, under the old way of doing things, it was a pretty meat and potatoes. If you excuse the expression to our Asian listeners, that's just a way of saying it's fairly vanilla, good, straight down the middle. Yes, it was a hold. Yes, we're looking at the data. That was it. However, a whole new structure for the RBA. A lot of people in Australia sort of felt a little bit disassociated with the way that the rate decisions were coming down, which I think probably has a lot to do with the fact that it was nothing but hikes for the last year or so. Mm-hmm. So there was a little bit of disassociation with the way that the messaging was being put. It's now a 2-day meeting. There's less meetings, and it's also with the conferences afterwards. Now, the conference was a little bit funny. The press conference was not comical. I don't want to say that. It's a new governor. She did amazingly well. She handled questions, but her ability to actually broadcast the message that they've got was fairly good, I'm going to say. So, yes, hawkish hold, looking at the data, definitely no hikes in the future. Anyone who says that is incorrect or misreading the data on that one. The next move is going to be down. Personally, okay, so that's the RBA, that's them. They're going to be holding. That's how it is. Personally, I will say that the data that is being looked at for the Australian economy is one that says that the next move has to be down, and I do believe that it has to be down quicker and sooner, sooner and harder in 2024 than what the markets were pricing over the last couple of weeks. So that's sort of where I'm standing on this one. That the economy underlying it is that we're going to see sooner cuts, faster cuts, harder cuts than there will be. Now, they won't be drastic, potentially. I don't want to be that guy, but I will say that the next move is down. And a lot of people are having those bets, those pub bets that we do in financial markets of is it going to be before the Fed? Yes, I do believe that the RBA is going to be cutting before the Fed. So that's where that stands, just based on the data that we're seeing and based on the data that I'm hearing through bits and pieces of the market, that's where it's going to go. However, a new RBA communicating in better terms, straight up with the people, it seems to be very well appreciated, and I think that people are taking that on board quite nicely, and the market seems to have accepted it quite well.
And perhaps it explains why the Australian dollar had a bit of a dead cat bounce after the meeting yesterday as well. If it's following your outlook on rates,
yeah, a little bit about the US dollar on that one as well. So it's got to be against. Don't forget, there's always another side of the FX coin. If you'll excuse the pun. Yeah. Okay,
well, let's stay in Australia and look at equity markets. Some drama this morning. The Woodside Energy Santos merger, which would have created an Aussie $80 billion LNG behemoth, I guess, that has collapsed today over differences around valuations. Could you perhaps enlighten us a bit more about that situation?
Look, it's been a bit an interesting one. This was all set to go. It wasn't set to go. It's sort of interesting one. Absolutely fell apart. Well, not fell apart, but I suppose they agreed on it. The potential merger ceased. Santos, now I have to read this for you, Jeff. I'm sorry, sometimes I don't remember everything I need to do. Following an initial exchange of information, benefits were not identified to support the merger, and that was from Santos. Woodside similarly said it would only pursue a transaction that its value that was value accretive to its shareholders. So they just decided that these numbers were not the numbers that their shareholders wanted to see as a case. Now, if you ever see a merger and acquisition, you want to make sure that you buy the rabbit and not the hunter. And when everything falls apart, you want to make sure that you own the hunter. That, from this exact point in time, is exactly what we've seen and should see. Santos fell, Woodside up. That's it. Look, I can't give you a take on where this leaves the Australian oil and gas market. That's not my bag on the individual stocks on it. However, if you're going to talk in bigger picture at this particular part of the cycle, there's more capacity for mergers and acquisitions if we're going to look at these sorts of things. There's more capacity for these things to be picked back up, for other people to pick up the pieces on these things too, with share prices where they are, with the ability to have script takeovers of things, and with the oil price also, what I believe is stronger for longer, and the requirement for oil and gas in our economy. I think that there is definitely there's more capacity for these things to take over. So it's not something that says it should be reverberated through the market in the oil and gas sector. This one, I think, was probably just a butting of heads with regards to the execs. Something specific on the prices, and we'll see this maybe picked up a long way down the road.
Right. Well, thanks very much for your insights today, James. It's been great to have you back on the show after a long absence.
No problem at all. It's good to be back, and I'll talk to you later, Jeff. Have a good one.
Okay. I'm Jeffrey Halley, and we've been speaking to James Wellen, Managing Director of BPC Wealth Management down in Australia, on BizTech's Asian Midday Market Watch. You can see this show on our website, www.biztech.asia, as well as our streaming platforms, as well as our media partners, television stations and radio stations. Thanks so much for tuning in.